we will learn that how you can find a multi-bagger, and we'll see what were the characteristics of Titan and Sera sanitary ware which given multi-bagger result to Rakesh Jhunjhunwala ji and Vijay Kedia ji. And also we will see in past 5 years whatever multi-baggers like Trent, one share you may have heard about Trent which runs Judio and Westlife, that has become multi-folded. What were the characteristics of these stocks, and also KPIT technology. This all will see what were the major things in their fundamentals which one can look into whatever stock he is having in his portfolio or he is planning to buy to get next multi-baggers for the next rally. So we'll start the video by seeing the fundamentals of Trent. You have seen that Trent was multi-folded in last some 5 years. The price you see, the price was somewhere here in August 23. August 23 means almost like 2 years back. Price was 1700 and price went up to 8300. From there, with this bear market, price has recently corrected to 5400. This was 27th of January, I think. 27th 20th January. So last week only price was 5400. Now again it has come up to 6100. So percentage wise, if you see from here also, October 23 also, if you would have taken 300%, means 3 times. So multi-bagger returns this stock has given. This is Trent. So what are the major things you have to look into while selecting a stock, that we will discuss. And these same qualities were present in Titan also and Sera sanitary ware also. So for seeing the fundamental, we will go to screener.in. This is that another share of KPIT technology. Somewhere here, if you would have bought in this breakout, this is November 21. From here it has 400% return, means 4 times. And these are not very difficult to catch. You may be thinking this is past thing, so this while talking this is nonsense, but once you will see that fundamental magic, you by yourself can judge and see. And I will show you a Zomato example also, so you will get to know what is the exact time when you have to buy the stock. So we'll go one by one what are the parameters which we have to look into in the fundamentals. So for that I will open this share Trend in the screener.in. Screener.in. This is free website. You have to open each and every stock whichever you are buying, either for short term or long term. You should once see the fundamental. If you are planning to buy this for 10 years, 20 years, then fundamentals are must. So first thing which you have to always look into is the market cap. What is the current market cap? This is the first thing you have to look into. Now why market cap is important? If company has already reached to a very high market cap like 12 lakh crore, HDFC Bank and TCS are now 14 lakh crore company. And now if you expect them to be 10 bagger, that will be a very big demand and big expectation, because 10 bagger means their market cap has to go to 140 lakh crore. So you can expect a 50%, 100% return from that, and maybe 15 to 20% CAGR per annum. But asking them to become a multi-bagger or expecting it to be multi-bagger and then buying it, then you have to be upset only. So first of all, you see that what is the potential size of that company, that market, and then what is current size. Now this trend has now become 2,20,000, but when it has started the rally, it was around 50,000 crore company. So there the large space was there to grow. So first thing you have to see always is the trend, this market cap. If we go to that other stock, that KPIT Tech, here you see KPIT Tech. So KPIT Tech also you see that currently market cap is only 38,000 crore. Now if you ask me to buy any of this Trend or KPIT, the first thing I will look into is that here lot of space is available. This is only now 38,000 crore company, whereas Trend has already become some 4 lakh crore company. Just now we saw 2 lakh crore company. So this has a larger space to grow, because 38,000 crore company can easily become 3 lakh crore company in this technology space where lot of other players are already TCS and Infosys are big players. So if it becomes 3 lakh crore company, here this will be 10 bagger. So shares price only you are seeing that this 1400 has to go to 14,000, but market cap also you start watching that what is the current market cap, and if it has to become multi-bagger, what will be the market cap. That time when you will see that HDFC Bank as 14 lakh crore company, and for it to become 10 bagger it has to go to 140 lakh crore company, you will understand that India's GDP is almost around 150 to 2 lakh crore company. So HDFC Bank cannot become 140 lakh crore company immediately or even after 10 years. It will be around 30-35 lakh crore company mostly. With that your expectation will be in line. Okay, so first thing you have to see is that what is the current market cap. We'll go to Titan and Cera Sanitaryware also after seeing this, that what was their performance in last 10 years, and you will see this all parametrics how they performed. The next thing you have to see is the ROCE and ROE number. This is the second thing. This will you will see here in this screener.in. Now this number should be more than 20. For a good company, efficient company, this both numbers should be 20. And if it is 25 or 30, that is very good. ROE number, if it is more than 25 for consistently 4-5 years, that is a magic. So here you see ROE number is 27% for Trent, and the other company, the KPIT Tech, you see this is number is even higher. 31.2% is the ROE, and ROC number is 38.4. This is return on equity and return on capital employed. So this shows the company's efficiency, that whatever capital they are using, whatever money they are using, they are generating enough amount of revenue and earnings on that. That shows in these numbers that company is efficient, how much more capital they need to grow. So if this number is more than 20, that is very good. For a smaller company, new company, this number should be more than 25 to 30. So these are the two numbers you have to watch. These are your second thing. Now the third thing will be to see is what is the book value. This book value is, suppose company will today sold out, so this is the price of that. So how many times of book value now the current price is. For banks and all, if you are getting any company in 2.5 times, that is very good valuation. And in COVID type of situation, some times will come where SBI was below its book value. SBI share was below its book value up to December 2020, when the COVID already had some 8-9 months. So that time also you could have bought the SBI. That time SBI's book value was 327. It was available at 256. So it was a easy buy, because below book value such good companies are getting, means that are at bargain. Now the next thing you have to see is the sales, operating profit margin and EPS numbers. So you have to come down in that screener.in here. And these three numbers you can find on this table. This is quarterly results. Quarterly it is growing or not. But for long term investing, you have to see annual results. So this is that annual table. So how we can see that? Here you see the first number is sales. This sales from 2013 to 2024. When you click this, you will get sales growth. So you can see the sales growth should be more than 25% at least for a company which is new, or it is a small company. That sales growth should be 50%, more than 50%, because that is a smaller company. But here you Trent share, you see the sales growth was here 19%, 22, then 33, and it was increasing like this. So sales growth is always about 25% in this period, March 20 to March 24. The COVID time when stores were closed, that time only this negative growth was there. But then after that you see the jump to 73%, 83%, and now it has slightly decreased to 50%. The second number is operating profit margin. How much profit margin the company is making. If it is 15%, that is always good. 15% is the magic number. So you see the operating profit margin is increasing, means company is decreasing its cost and increasing its profit margin. That is always a good sign. So now it is above 15, but it should be always above 15 whatever company you buy. And the most important thing is EPS, earning per share, how much a company is earning behind per share. You see this number is not growing in this period. Up to here you see this number is not at all growing. I will just go up and I will show you. This number you can see is not growing up to here. No change in this number. Means company was not increasing its earning. Then why share price will increase? Then from here the jump you see, 3 rupees to 12 rupees, 400% jump. 12 rupees to 42 rupees. How much? Almost 3.5, 350%. Now that growth has slightly decreased. Growth rate is decreased. EPS has increased, but this was the period where the growth was there. So very high growth has been seen in where the stock price. If I will show you this March 23 only this growth was there, and 23 only that share price has started becoming a rocket. Here you see that March 23 period. This is that March 23 period, somewhere here. From this onwards, March 23 share price was 1300 only. And when that EPS started increasing or shown a very high number, from here with EPS only if you would have bought somewhere here in March 23, maybe that result might have come later. So here also in this breakout, this was a breakout. You can see, and volumes also coming. This volumes also coming, you can see. This was the volume started coming. From here onwards in charts, volume were there somewhere here. So in this breakout also, if you would have considered buying after this channel was broken, this is that weekly chart I am showing you. This is a week, means this is almost an year. After that, this breakout with these volumes are coming. So all things were positive and the share has become multifold. So it was not that hard to catch this. Now this EPS you start looking in all your investment. Whenever you are investing, this EPS you see. So here you see that now that profit growth of last 3 years is 100%, and 5 year it is 57%, and TTM profit growth is 128%. So your stock P ratio should be below this value. So always see that your stock P ratio if within this range or not. So currently stock P ratio is how much we'll see here itself in the topmost area. Here it is showing 162. So it is slightly costier, valuable, because value has been given by markets since it's showing that EPS growth. But when it fallen in this current decline of market, if you see from here P ratio, and we'll go to 1 month, the P came down to 140 when this 20th June, 20th January. Now again it has gone to 161. Okay, so always try to buy this type of stocks when they are available at lower P, and that will be possible when market will correct. Suppose Nifty will correct, then all shares will correct. If you see the chart, when the Nifty started correcting from September onwards, this stock also corrected, and that was the time to buy it. That is the time to buy such fundamental good stocks, because this is the area where all stocks will fall because of the market correction. The stock which was available at 8,500, that was now in correction it was available at 5,500. So this is an Amazon sale you should always look into and try to get this type of stocks. This is not a stock recommendation, but for learning you have to always be careful that in market correction try to catch this type of shares. Now the next thing you have to see, this is that EPS profit growth, how much is there in last 3 years, and TTM and return on equity. Return on equity we talked, ROE. So in last 3 years it is 15% and last year it was 27. So it is increasing only. These are the basic numbers you have to see. Now what is the borrowing? How much company has borrowed? This number should be not very large amount, because if company is in huge debt, it can collapse anytime. So this number you will compare with market cap. Always compare this number with market cap. What is the market? So market cap is almost 2 lakh crore. This is 2000 crore. The very small amount only is in borrowing, because company is cash rich company. You see here, company is generating from operating activity 1300 crore rupees of cash from operating activity. So this cash, if company is generating cash, here these numbers are positive. Here the number were lesser, but now the company is earning in cash from its operating activity, and the net cash flow also is positive. So this is also a good sign. So this many things you have to see while choosing any stock, at least this many things for a layman who don't know much, so he will be secure for most of the time. If you see very quickly for the KPIT technology, now once you learn this art of seeing what are the parameters to be checked, you can go through any stock in 2 or 3 minutes. I will show you how. First thing is market cap. Okay, I understood market cap is decent. It can grow. It has large space. Only 38,000 crore company. It can become a lakh crore company or 2 lakh, 3 lakh easily. So, okay. Now, P ratio is 51. I cannot say this is more or less until unless I will see the profit growth and what is the P ratio company has got in the history. ROE is very high, 38%, very good. ROE is 31%, very good. Now next thing what we'll see is that historically company how much P market has given. So P ratio you click and 10-year you do. So here company was getting 8 in 2020 COVID time. It has gone up to highest 86 and now it is about 5-year low. This 22 means 3-year low it is available at 51. Now we'll see what is the profit growth and all. So here you see that other companies in this same area are getting 70, 49, 48, 79. Only Oracle Finance is available at lesser P. So Oracle Finance itself is a very good company and that is why it also has become a multi-bagger. Oracle Finance, and now also it is available at very good P ratio. Other than that, KPIT P ratio is similar to industry other shares. Now sales growth, you see sales growth is, here you see it was 20%, 2020, then from here onwards it has started increasing in this range, 61%. This is quarterly result, June 23, September 23. In the chart also if you go and see, these areas will be a huge run from December 22 to September 23. So if you see that December 22 from September 23. So this is that somewhere here December 22. December 22 is this region. So December 22 to this rally, this has come because of that sales growth only. So always see that high sales growth is there or not. Now operating profit margin are more than 15% for a long period of time. So it is a very good sign. EPS you see, EPS we'll see this is a quarterly result, we'll go to annual result. Here you see that EPS. EPS in 2018 was minus 27. It has become positive and now started increasing. Here it become doubled. Here it become doubled in 21 to 22. And stock started the rally here only. And now also you see that stock is giving consistently profit growth, EPS growth, and that only I always see. These are the compounded profit growth. So its P ratio should be around 60, 40 to 60 its P ratio should be. That is currently available at 52. So that is a good P ratio. But if market correction will provide you this stock at 30p, 40p, that will be the opportunity to buy such stocks. Okay. ROE, always you see higher ROE this company has maintained. So this has a capability to become multi-bagger, not a stock recommendation. Now other thing, cash, operating cash 1000 crore it has generated from its activity. So suppose it has a grocery shop and it is generating a 1000 crore cash, 200 crore cash in net. So these are the general fundamental parameters. Now you saw this, now you can take entry exit as per the charts, because you understand that fundamentally also company is very good. So whenever company will give you some opportunity, you can grab it by both hands. Now we'll go to the old multi-baggers like our Titan and Sera Sanitary Ware. What were their performance? So you see now the company has become 3 lakh crore, but when it started growing, it would have around 30,000 crore, 20,000 crore company. But now it has become 3 lakh crore company. It can become 10 lakh crore company, but it cannot become 300 lakh crore company. You should understand this. So if you are expecting Titan to become 100 bagger from here, it will take how many years you can assume, because it has to become 300 lakh crore company. This itself will give you a minds that okay, 300 lakh crore company is very difficult. Maybe this price will give you that feeling that 3500 can become 100 times. Like I don't know how much it will be. So that, but that market cap will give you that feeling that okay, this cannot happen. Now P ratio is 97. Now we cannot tell this is more or less until unless we'll see two things. First, how much historically this stock has got P ratio, and how much is the profit growth. Now ROC and ROE number, you see these are fantastic number, 22 and 32%. This only I was talking, this number should be more than 20-25%. And this company is very old company, so it has maintained this up to this many years. That itself is a big thing. Now here you see P ratio. P ratio last 10 years, you see price ratio around this 59 to 82 always market has given. Sometimes market has given in that COVID bull rally up to 198, but it crashed to 66 later part. Now again the price, this P ratio is within that range only, 97 whatever market is giving. But suppose this same stock will you will get at a P of 60, around 60 65, like in January 23 you were getting, and suppose here 50, that time this stock you should take in your portfolio. Or these stocks will not give you multi-bagger result, but more than that 50-20% whatever you need for that CAGR, that you will get here. Now the bottom things, you will see the sales growth. So sales growth you see from 2013 onwards, 14% was the sales growth in 2030, which has become 21% in 2018, and now it has become 33-40%. So it has always maintained that 20-25% of sales growth every year from this many years. This is a basic sign of a good company. The operating profit margins are always around 10 to 12%. In this industry where Titan is earning all its products, these are having lesser operating profit margin compared to that whatever we saw for Trent and KPIT, where 15% operating profit margin were there, but it has maintained that 10% continuously. Now EPS you see year by year, this will solve your many problems. EPS number, how it is growing. So EPS number, we'll see 2013 8 was there, EPS was 8, and it was almost flat up to this point. 2017 it was almost flat. Now here that jump was there. Now here 50% EPS was increased, and now this region you see that EPS growth up to here. The 10 has become 24, 24 has become 36, and now here it is almost flat. Now this has again become flat. So share price also, if you will see that share price will also increase when this EPS was increasing. So this is a simple thing. But EPS has always been given a growth. Last 3 years 54% growth was given. Now the growth is lesser, so stock will correct or it becomes sideways. This is the basic funda of stock market. Now this is that our third share. Now I will want to show you one share, that is Sera Sanitary Ware. This is Vijay Kedia's share. Vijay Kedia bought it and 1600 times it become. Like that is the claim. So here also you see this is only 8,000 crore company. Now also the company is only 8,000 crore company. So lot of potential is all there. Current price you don't see, price and all will not, price one will see the price 6,700 and he will feel that stock is costly. Stock prices are not costlier or cheaper based on the stock price. It is based on its fundamental market size, what is the P ratio and other things. P ratio is only 36.6. ROC number you see 24 and ROE number is 19%. So these are very good numbers. Book value is 938. So stock is available at around 7 times of book value. So this has to evaluated whether it is cheap or it's costly. That will come here. P ratio will see what market has given in last 10 years. So P ratio you see sometimes market has given up to 65 and lowest it has given 24. So when the stock P will come down to 24, that may be the good time to buy the stock. Now here you see the sales number and prof annually sales numbers we'll see. So sales growth, if you see sales growth was 52%, 23%, 16, 13 and it has decreased up to here. Now again it has started increasing in 22 and 23, 24 again it was decreased. That is the reason stock is not picking up. Where the stock was giving a good these numbers, this become rally. And this region where it was negative because of that lockdown, it might have not given that returns. Now again that stock has given 19% and 25% sales growth, so it will fly. Now the bottom you see that EPS numbers. EPS numbers are very important. In 2013 the EPS was 36, which become in 2018 79. Now that EPS growth itself is showing you that how the stock is earning. That EPS has consistent growth. The 2014 number is 41 and 2024 number is 183. So almost 4 times EPS has gone. 4 times EPS has gone. And share price is P ratio multiplied by EPS. P ratio is almost similar to what 2014 P ratio was there. So from there also stock has become 4 times. So this is a simple math. You can always look into what is the EPS, what is the ROE, ROC number. If you see Zomato fundamentals also, Zomato stock also gained where that EPS turned into positive in July 2020.